Hello and welcome to the day ahead. It is the 23rd of May. I'm Nadine Blaney. Well, bond yields in the United States moved lower, and the US dollar and equities rose slightly after the US tax bill was passed in the House. The ASX is expected to lift at the open by about 22 points, or around 0.25%. That's after the benchmark S&P 500 and the Dow Jones Industrials ended flat. The Nasdaq pushed slightly higher. If you recall, all three indexes had posted their biggest single-day percentage drops in a month on Thursday, the previous session, I should say Wednesday. In stock specifics, Nike shares rose on plans to rejoin Amazon and hike some prices. Xerox shares crashed. At one point, they were lower by 9% in extended trade after it cut its quarterly dividend in anticipation of closing the Lexmark transaction, though the company did reiterate its full-year forecast. Intuit was up by close to 6% in extended trading on a pretty robust quarterly forecast. Now, Ross Stores, which is a discount retailer, shares were hit after it withdrew annual forecasts on tariff worries, and NextEra Energy shares fell on expectations that U.S. President Donald Trump's tax and spending bill could end many green energy subsidies that have really been powering the renewable energy sector. Meantime, U.S. crypto firms rose after Bitcoin hit record highs, including Coinbase. Bitcoin, is trading currently at around $111,000. Now, likely to impact trade here today, we saw gold miners falling as the gold price slipped on that stronger US dollar, and oil stocks also fell on reports that OPEC Plus is discussing further output hikes. So Donald Trump's so-called Big Beautiful Bill, which is a sweeping tax and spending bill, passed the US House of Reps. Now, the bill passed by a single vote margin. It will deliver new tax breaks on car loans, and it will boost spending on the military and border enforcement, adding about $3.8 trillion to the federal government's debt over the next decade. That's according to the U.S. Budget Office. In economic news, jobless claims fell, but business activity improved in May as the U.S. called a truce with China over trade. However, the PMI is indicating that inflation is poised to accelerate sharply. Manufacturing delivery delays were the longest in 31 months, while exports of services, including spending by foreign visitors to the United States, dropped at the sharpest pace since the COVID-19 lockdowns. And U.S. existing home sales unexpectedly fell in April. Meantime, in Europe, the PMI unexpectedly dropped, falling below 50. Services were particularly weak, though the German IFO index rose in May. And Deputy Governor of the RBA, Andrew Hauser, spoke about the Australia-China economic relationship, saying his business contacts in China see opportunities for Australia amidst the U.S.-China trade rift. The U.S. 10-year yield fell from 4.6 to 4.54%. Markets are pricing a 0% chance the Fed funds rate will be cut by 25 basis points at the next meeting in June. FOMC member Waller said that the central bank could cut interest rates in the second half of 2025 if tariffs settle lower. The US dollar lifted modestly, putting slight pressure on the Aussie dollar. It's currently trading just above 64 US cents. Oil prices are at a 4-year low. There are reports that 8 OPEC Plus countries, which are meeting on the weekend, will be further speeding up an oil output hike come June. So Brent crude oil futures fell 1% to $64 per barrel. Copper rose 1%, iron ore fell slightly to $100, and gold fell 0.7%. Today, there's not much on the agenda locally, but in New Zealand, we get retail sales for the first quarter, which are expected to be flat. And a lot of Fed speak tonight. FOMC members Barkin, Williams, Goolsbee, Muslim, Schmidt, and Cook all speak. That does it for the day ahead on this Friday. I'm Nadine Blaney. We'll see you next week.